Good evening. This is the Elliott wave update for the S&P 500 for Monday, March 28th, 2022. The S&P continued higher today. Not a big surprise. As I left off last night during the update, I had suggested that I was looking for additional upside, but I was looking also at the same time for a completion of wave 5 to then complete wave A of the intermediate wave 2 bounce that we're now in. So we're close, I believe, to completing that first leg up. And it is a 5-wave structure. So we're looking for the completion point for wave 5. Now, I've added a couple of things so we can start to put some parameters around wave 5, and we can start to see where we have potential and how deep a B wave can go. Now, just to kind of reiterate, this point, which was for 41.38, actually it's 33. Yeah, it's actually a little lower. In any case, this point completed wave 1, the intermediate wave 1. And then we've now put in a 1 and a 2 for the wave A, or the wave 2 corrective bounce. So on an intermediate degree, so we're looking for an intermediate A, B, and C, of which the A wave, that's what I'm looking to complete. Get a B wave that should come back down, maybe 38%, maybe 50% of what we've just rallied. And then, boom, we rally again in an additional 5-wave rally to put in wave C to complete wave 2. Now we're getting up there. And there's now a lot of talk about that the market can certainly go another 300 points. And to be honest with you, it sure can. And that's going to change a lot of things all over again. But it doesn't mean that you can't trade it. It doesn't mean that, oh my God, you're wrong, and I've been waiting for it to go down, et cetera, et cetera. We've all been waiting for it to go down. But if it doesn't, what are you going to do? Complain that you've been playing it from the short side as it screams higher in your face? No, I hope not. We need to be very flexible. We need to be more fluid because the market is actually fluid, and so is the wave count. But right now, I continue to look at 48.08 as being the completion point for the intermediate, primary, and cycle degree 5th waves. And so that suggests and continues to suggest that what we've done now is completed 5 waves down on both up to the daily chart for the intermediate degree first wave to be put in. So first we got the minor degree first wave, then we got all of the minors coming into 5 to form the first intermediate. Now, a lot of people can consider that a 3-wave decline. I do not. I think that it traces out better and it is formed better as a 5-wave decline. So in any case, I'm looking for this to complete. I'm looking for, now we have additional resistance at 45.93 to 4,600. And I think we get a stop there. I think that should be it. We could get up to 46.38 or somewhere in between. We're going to get that turn. We're going to drop below in a B wave. Now, you can also run some fibs if you want to use these points, these price points, 45.93 to 4,600. So you would then just run retracements from the low at 41.2950 to that high, wherever you're marking it. You could use 4,600, and you're going to get your points, your Fibonacci support levels for a B wave. B waves can be between 382 and 618. And that's just what they can do. And then, but being that this is a 5-wave structure, I would be looking for between 382% and 50%, with 618 being the outside. So this would be the reverse. If we kind of get that from there, then 382 is going to be about right here. So we'd be looking for 44.62-ish, which happens to coincide with the daily 8. And then we have the 50 and the 200 still sitting right together at 44.23. These would be very logical points for a B wave to come back down to, or we drop to the 20, which is sitting closer to 4,400. Remember, if we get up to 46, that's a 200-point drop. That's a fair amount for the rally. It's almost 50%. So again, you can see what that's going to look like. But I would fully expect, unless this is news driven and it's going to point to, sorry, we've topped and now we're just, whatever the situation would create that. But we know that they're out there. So without a disruption to the count that we have going right now, my expectations are for a B wave down, followed by a C wave back up. Now the C wave, most common in this, what we're putting out right now, is that the C wave would be expected to be 618 times the length of the A wave. The A wave is pretty big right now. So 618. So we're still going to be underneath all of this to the best of my knowledge. Possibly we drop down to 44, then we rally back to 46 or 47. Start getting up in here. But I still believe that we will top below 48.08, and then we will have a very severe decline. So, but right now, I am still looking for additional upside to complete wave A. What continues to contribute to this now, as I went through on the NASDAQ, and again, we need to remember that within the S&P, which was down because the Dow was more heavily down most of the day, did manage to come back up. And here's why. Apple did recover after being down and ended up on the day. That carries a 7% weighting in the S&P. Microsoft, almost 6. Amazon, almost 4. Google, which was down slightly, 2. Tesla, 2.2. So if we just kind of put this in together, that's 2.2, that is 4.6. Then we have 8.6. We have 14, about 23%, almost 23% of the rally off of the low for the S&P was due to Apple, Microsoft, Amazon, Google, and Tesla. And we can't forget that NVIDIA is number 7. And Facebook is number 9 of today, of the components of the S&P. These were the ones that really were kind of just pumping it back up after being down. So it had a solid update. Now, having said all that, Tesla, now under the board of Tesla, has approved the issuance of additional shares. So, but it still needs shareholder approval. If approved, I am sure they're going to be announcing an additional stock split. The last time they did a stock split, I can't quite remember exactly where the stock was prior to the announcement, but I know that after the announcement, it traded above 2,800. And it went pretty much in a straight line. Now that would just, really kind of cause a really stir to the force, so to speak. So again, that's out there. So we may not get much of a B wave because we've got major large cap companies that are being pushed in one direction. So a lot of money coming in for a variable amount of reasons. So for tomorrow, again, I'm looking for additional upside, but I am looking for the completion of this 5th wave and then the A wave, as then we would start into a B wave decline, which will be a decline, a small rally, and another decline. So what we're looking in terms of an ABC up, we're going to get an ABC down, just not as intense or severe. So in fact, I would think that this B wave is going to be almost more flat, high and low kind of being very close to each other. And the C wave not really getting much further than the low of the A wave because of Google, Amazon, Apple, et cetera, et cetera, et cetera. Okay. Microsoft in there as well. So I'm going to finish it right there. Our next update will be on Tuesday, the 29th.